Hey everyone, this is Jim from Dado Finance. Welcome back to our channel. We are with you on 8th of April, Friday. We are closing the week with this video. The trade on right now, it's the Euro to US trading session, and with this trading session, we will just end up the week. We have seen a lot of volatility in this week, but the biggest gainer of this week is the dollar index and US 10-year bond yields, because the coming days, each passing day, each passing statement by Fed, it's getting more and more hawkish because expectation is not slowing down, and inflation. A lot of people, just like even Fed officials, just presumed that because of base effect, just thought that all right, like in the 2021 April, oil prices was around like a $70, like a 65 $70. If we just like maintain the price of oil at $80 level, so the gap between that one, it will be just $5 $6 $10, then it's not big deal, and that will just cause a lowering effect of inflation. But it didn't happen because these Russia Ukraine stuff just started. So we have seen oil prices over $100, so that caused another inflation scenario. The base is not going down, the release number is going higher. Next week we will just receive the inflation rate of US for March. That month we have seen $130 oil prices, and highest level of oil prices on that one as well, like gas prices, pump stations. We have seen that one. So expectation is 8.3, but even it may just test 8.5, 8.6. This is also in possibilities. So that's why we have seen the big jumps in dollar index. As you can see here on the chart, it has tested 100 levels today. On the last hour in the opening of US opening, it has tested this one. Now it's just trying to consolidate, but important thing is this level is right now becoming support line. It was a resistance, it has been tested many times, but now it's becoming a new support line. Higher level of that one, 103, is the highest level we have witnessed on the last 10 years. So we may test that one again if these circumstances goes like this. All right, that was dollar index. Let's go to gold.
You are ready to win with us. GAN Market.
All right, gold has made another attempt on 1949 level. Reason for that one is China. China is just getting angry with US, and Nancy Pelosi's visit. Probably it's not visit actually. The planning visit to Taiwan in the coming days is just making everything cautious, because China warned US just really tough tone and said, if you do that, you will bear with the consequences. Just like Russia, we may see military action to Taiwan by China. That's why like investors are just pricing these buying gold and silver. They are pricing that one. If that happens, we may see another 2007 level, even higher level, because the base of that 2007 level, it has went to that level from 1800 levels. So right now we are already in 1940 level. It may test even 2150 levels. That's also possibility. So I hope US just like it doesn't make these kind of attempts and doesn't make these kind of mistakes, because in this war environment, we should just expect these countries behave responsibly. That's my expectation. As you can see here, it has tested, but right now it's just not rejected yet because we haven't seen any red candle. So in the coming hours it can test again. If you see some red candles on here, so we can say a rejection. So the rise still on the way. It may test again this level, then we can see another decline or just pass away for this level. All right, let's look at oil prices. All right, our last chart is oil prices. As you can see here, oil is on decline, and the important thing is 97. This was just a kind of support, but it is becoming a resistance right now. It just went under that one, under that level, and it has tried this morning and this afternoon a few times, but it didn't happen. There are two main reasons for that one. First one, SPR released by all consuming countries, and the second one is growing impact of COVID in China, because China is really big consumer of oil. If that in springtime we have seen a lot of outbreaks in China, so if that happens again, so we may see some more lockdowns in China because they have zero COVID policy. So they just let me just explain the reason of that one. They have really old population. They have really big old population, and if these old population die at once, then consumption will just go lower, and they are just having trouble with real estate sector prices. Let me just understand you very well. A lot of people just will have pass away, and there will be a lot of more houses in vacancy. It will just make everything worse. That's why even just one of the reasons is this: they don't want to lose anybody. All right, that was it. Thank you so much for listening us, and we will together more news on Monday. And I hope you have a good and safe weekend. Bye.